Hello and welcome to the last episode of Business Nigeria, a program that brings you up to speed with happenings in the business world. I am Tolulokpe Ogunjobi. Welcome. Thanks for staying with us. Now, the Nigerian equities market closed the week on a positive note as the NSE's All-Share Index advanced by 0.34% to settle the YTD return at minus, that's yield to date return at minus 5.27%. Now, in the banking sector, Wema Bank led the pack of advancers with 8% at the close of to close at 0.54, that's 54 kobo, and Guaranty Trust Bank topped the losers log with minus 0.16%. Now, at the close of 24.70 kobo, while Diamond and Fidelity banks remains unchanged. Now, looking at the heat map, the general market sentiment revealed that the number of gainers outweighed the number of losers with a ratio of 2-to-1. Now, by the close of market today, while Nigerian Breweries PLC and Mobile Oil Nigeria PLC led the pack of advancers and decliners respectively. Now, Omsov Bank was the most active on the chart of the top 5 movers with 50 million worth of contribution in volume, and last on the chart is UCAP with 6.67 million worth of contribution in volume. That's with while Union Bank PLC emerged the highest dividends yield equity, with Fidelity Bank and Wando also making the list. Finally, at the close of the week on the international scene, dollar fell against major African currencies, but the exchange rates against the Nigerian currency remains unchanged. Following the end of the Christmas holidays, the Nigerian equities market opened the last week of trading of the year positively, with the that's the All-Share Index advancing by 0.76%, bringing the year-to-date return to minus 6.82%. After a 5-session downward trend experienced before the holidays on the floor of the Nigerian Stock Exchange, the oil and gas sector has finally bounced back to lead gainers, the gainers column, by the close of trade on Thursday. This was primarily due to gains by Total, Seplat, and Okumu Oil. Total and having a percentage gain of 4.14%, Seplat 2.56%, and Okumu Oil has a 1.64%. Also, the consumer goods sector also broke its 5-day lose streak to emerge among the forerunners in the gainers column yesterday, with NASCOM having solid gains of the NSE on the NSE trading floor with 3.79%, PZ Cousins 1.75%, and Dangote Flowers PLC 4.58%. A market recap on the 2016 performance of equities in the Nigerian Stock Exchange reveals that Dangote Flour and UCAP had the highest year-to-date return. Dangote Flour settled at 132.09% and UCAP settled at 111.85%. Based on the value of the Guaranty Trust Bank and Zenith International Bank PLC had the highest value traded within the last 12 months of trade on the NSE floor, having traded 109.69 billion and 72.10 billion respectively. While Wema Bank PLC and United Bank for Africa PLC had the highest volume traded within the last 12 months, Wema Bank PLC traded with 6.60 billion and the United Bank for Africa traded with 6.46 billion volume. Finally, the price performance of oil and gas in the OPEC market, that's crude oil, in the last 12 months revealed a drastic upwards momentum in the price of crude from $31.42 per barrel to 51 and about 52 even as we speak per barrel as the year comes to a close. Well, interesting developments there all across the year. Now, with me in the studio is the head research and strategy, Elix Investment Partners Limited, Abiodun Kerikpe. Thank you very much for your time, Abiodun.
Thank you so much.
Now, I'm sure you saw some of those highlights there, looking at the banking sector, the oil and gas sector, and what's your assessment for the year? Let's look at it, the Nigerian stock market. How would you rate the performance of most of these companies?
Looking at the market, really, performance of companies from the start of the year up to where we are would say is really not so, fantastically impressive. Permit me to use those words. And this is pretty much tied to the lag in overall economic performance. We understand from Q2 of 2016, Nigeria slumped into a recession following the Q3 GDP numbers. So, those numbers sort of tell you that these companies are operating in an economy where business environment is quite tight. And we pretty understand that because we could see some of those key indicators looking at the FX environment where there's been so much of, shortage of supply into the market, both at the interbank market, at the parallel market, and even at the BDC market. Also, we see what's happened to crude price. Even though, over the last couple of weeks, crude price has been able to pick up some momentum, but that is not sufficient to compensate for the loss we've had and for the impact that has had on the economy, since the start of the year. So all of this is has affected the market, and in a way, investors have reacted. Perhaps because we're just at the end of the year, which before now we used to see some very strong rally towards the end of the year. We call it the Santa rally. But since the alignment of most of companies year end, especially the banking sector, to December, this momentum in the Santa rally has sort of slowed down. But given that we've had a very poor performance in the equity market, it just makes some sense to see portfolio managers, to see investors and traders to want to be a little bit bullish at the very last trading weeks of the year, to at least push stocks to some level where you could close your book on a much more positive note. So that has resulted into us seeing the year-to-date, negative return, which was at about negative of about 12% at some point around November, very first week in December, contract to about approximately 6%, negative 6% where we are at the moment. So I think this is just investors, not really, maybe pricing in a bit of the OPEC crude deal, on one hand, and on the other hand, just saying, guys, if we don't make ourselves happy, who's going to make us happy? So that is just what we're saying. A bit of the OPEC crude news, a bit of market traders, portfolio managers looking at their books and saying, we've got to shrink this negative performance to at least to a modest level. If I look at my projection for 2016, it was purely negative, but I could recall estimating to see a near negative 5% loss for the year. We're close to it, but I think that's pretty much in line with, not in line with expectation, but
I tend to be worried about the issues relating to the price of crude. Just like you identified the issue of the OPEC countries coming together saying, okay, there's going to be a cut. But basically, many have attributed this downward trend in the capital markets. Basically, most analysts have hinged it on the drop in crude oil price. Would you say that's 100% of it?
Okay, no, it's not just 100% of it. So, okay, maybe 100% of it, because crude price is a very, very key indicator for the Nigerian economy.
It is.
So with
Angola,
crude price where it is, and again, crude production cut down drastically to about 1.4, 1.6 million barrels a day from the 2.2 million barrels we used to have. Those two factors added together had a ripple effect on the economy, which from there we began to see FX issues, in reaction to that, CBN had to come up with different policies to sort of counter demand in the market. There were the 41 items that are taken off the import list. All of this cascaded into seeing this negative performance for the market. So on one hand, if you say, yeah, it's primarily because of crude, then you need to sort of dovetail further down to highlight how this crude scenario then affects every other variables, and then it gives a better picture of why the market has just been the way it's been.
Let's look at the banking sector now, which is a very sensitive and important sector with regards to the Nigerian economy and even other economies across the world. There's been an issue of stability, and most of them are coming out with results now, profits here and there. Just like, I thought reverse would have been the case.
Okay, the case with the banking sector is a banking sector is a sector that ordinarily is positioned in such a way that regardless of where or the mood swings in the economy, they are still able to tap into the down opportunities and the up opportunities to at least declare some decent numbers. When I say decent, I mean maybe not too fantastic numbers, but something decent. So for the banking sector, they've been able to play pretty well in the FX space, despite the shortage we've had. They've been able to, I mean, you don't have any other major alternative as a major business person, whether you're a crude importer, you're a PMS importer, or you're an airline operator, or you're a manufacturing or industrial guy, you still look forward to the interbank market to get your FX supply. So they've been able to make some decent spread in that space. I mean, they've had opportunities of also, I mean, just after the CBN announced the floating of the FX market, they've been able to revalue some of their assets based on those numbers. And again, taking a bit of a hit also because of the decline in oil price, which affects some of their oil and gas assets, the loans they've created to oil and gas companies. So on the balance of scale or balance of these factors, they've just been able to, and maybe not all of them, just a few of them, the much more bigger ones that have the stronger balance sheet, they have a stronger capital adequacy ratio, have been able to weather the storm and then in some cases report some numbers in profit, though they still show a decline in profitability, but they're not reporting losses, which is appreciable and commendable for the market.
Let's look at the consumer goods sector now. Like what I have research here, say it broke its 5 today, lost streak to emerge among the forerunners in the gainers column. That's at yesterday. Now the trading floor, that's about 3.79%, PZ Cousins 1.75%, and also Dangote Flour at 4.58%. I think these sectors are before now, I think the focus used to be more on the oil and gas, banking, but I think something else is happening. There's a change. The consumer goods.
I don't think that there is a change in the consumer space.
Okay.
For the consumer space, unlike the banks, they take a direct impact from all of the volatilities in the economy. So where you've had massive job cuts, consumer spending directly or indirectly shrinks. Where you've had jump in inflation or rising inflation, it affects them. Where FX has become so much scarce and very pricey, they take a direct impact from them. From that, I mean, they've barred importation of some key raw material inputs. They're taking an impact from that. So if you're a consumer guy that have not over the years been smart to scale back, to do what we call the backward integration of some of your key raw material input, you probably would be taking a massive hit from what's happening in the economy at the moment. So for some of the gainers we've seen over the last weeks, take for instance Dangote Flour, which has done nearly 200% this year. The story behind Dangote Flour is not, or what's accounted for the jump in Dangote Flour is not really, I mean, fundamental performance. It's more of strategic moves behind the company. We understand Tiger Brands used to run the company. They took body over from Dangote. They ran it for barely about 2-3 years or something, close to that. and they weren't able to return or steer the company back into profitability. At some point, I think it became a bit of a dent on the name of Dangote. So he decided to take over the management of the company, buy it back from Dangote brand. And just that singular act sent the market to just reprice Dangote flour, and from nearly maybe a little bit below 1 naira or close to 1 naira, the stock jumped back to about 5-6 naira, and that's where we've seen that massive jump, which is the major key consumer guy that's been up this year. All of the other guys, if you look at all of the other companies, if you look at their performance, fundamental performance, look at their earnings report cards they've released, it's not been so fantastic. The ones with strong dividend culture would keep up with the culture, they will keep paying dividends, but their earnings, their profitability, their margins have shrunk due to rising costs, due to inflation, due to drop in consumer spending, and due to...
Indeed, Abiodun. Let's go on this break now, and we'll still have Abiodun here giving insights into issues surrounding the market and, of course, the entire economy at this time as we round up the year. Today is the last working day of the year, indeed, so a lot needs to be, we need to project for the new year. Yeah, let's go on this break, and you'll be back with Business Nigeria. Stay with us. Thanks for staying tuned. You're watching Business Nigeria, and I have with me in the studio a research and strategy analyst here, Elix Investment Partners, that's Abiodun Kerikpe, has been giving insights into issues surrounding the capital market and all of it for the year 2016. Now, before we went on that break, something pricked my mind, and I remember that the issue of investors' confidence remains very paramount for Nigeria at this time. We know the challenges we faced before the elections, after the elections, policy somersaults and all of it, all to help boost our economy. What do you make of the confidence of investors in coming back? Because we know the flight, they've taken lots and lots of money out of the country.
I mean, at this point where we are now, restoring or boosting investors' confidence has to still be sorted out with policy issues. So all of the sort of policy somersaults, like you mentioned, that we've had since after the elections and for most of this year, majorly from the monetary policy authorities. I mean, I just overlook fiscal policies. I don't know why. I follow more monetary policies. I think we need to begin to see a much more firm and consistent policy trend from the monetary policy authority, particularly as it has to do with FX. I mean, that's just about the most single important variable that all of the foreign investors are looking at to make a call on the level of confidence they will have on the economy. And so lucky us again, we're beginning to see crude price climb upwards, and the outlook is suggesting that this should be much more, stable for the most of 2017. And then also where we're able to ramp up on our production as an economy, those two factors put together portends that we should begin to see a much more clear sanity in the FX market. And then CBN then have to be much more decisive on what they want to do. If it's about floating the market, floating the FX market, float it 100%. If it's about floating it, say clearly you manage floating it. Although, each of those policy actions have their implication. Imagine if CBN doesn't imagine if they don't allow the managed float where we're seeing at the moment. That means we can't tell what levels where the naira will be trading at the moment against the dollar. So being clear on what they want to do with that is very key at this point in time for me. So I think that's the most single important variable for boosting consumer confidence at this point in time and into 2017.
Very, very interesting. Maybe before we round up this, because I know we are actually running out of time, you already touched it, the issue of crude. Now let's look at our budget predicated on and what we have now. I think it's going to be a good one for us, and just like Sevoko could meet the 2.2, because I know we are not doing 2.2 at the moment.
Yes,
that could be a step in the right direction for our budget, right?
Yeah.
Well, a lot has been said. I think I'm going to leave it at that for today. Elix Investment, Research and Strategy, and an analyst who's been with us, Abiodun Kerikpe. Kerikpe. I think I'm correct with that now. You
Yes,
know,
yeah.
Kevin, I must appreciate you for your time
Thank you
on
so much.
Business Nigeria.
Thank you so much.
Thank you. Well, it's on that note that we move to the crude oil prices, which look set to climb higher levels in the new year, just like we've also discussed in during the topic of discuss for the show today. Now, analysts say that the November output cut by OPEC members has supported price movement. Now, at the London market, the Brent trades for $56 per barrel, rising above a quarter of a percentage point. For the OPEC basket, the price steadies at $52 for a barrel. Well, that's our package for you today on Business Nigeria. Join us again another time for more insightful analysis. I am Tolulokpe Ogunjobi. I leave you with the figures of the graphics of the exchange rate as it stands today, and I wish you a happy new year in advance. Bye for now.